Good morning, everybody. Welcome to the Morning Vol Report. This is Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to said report. Remember, options, this is for options education purposes only. Trade at your own risk. Consult your financial advisor. If you want info, Mark, he usually does something on Kramer. You can check out there. We write a blog a couple times a week besides our morning market report. Buy Apple now at lower prices. This is turning prescient. And I need to handicap the VIX. This was yesterday's blog. We'll talk about this in our chat room a little today on basically, what's going on. I mean, think about it. You basically had the president and the Chinese. They've called like, okay, we're going to negotiate for another month now, right? And the way I look at that, if you're trying to set up a trade, is okay, you guys are going to negotiate for another month. And I lost. Where did I lose my? And I lost this. So if you think about it, that just means the range for the index is kind of in, right? Like, the bottom for SPX is like on the, everybody freaks out, 2,800. We're not making any all-time highs in the meantime. I mean, so you've probably never gotten a better signal for an iron condor in the SPX. I would not look at the Qs in the same way because you do have the tech, like Apple could easily bounce back to 200. Amazon continuing to be on fire. Google is up, $60 in 2 days. So you have room for technology, I think, to move a lot more. The SPX still has other stuff in it. Banking's not doing well. Oils aren't doing any well. Healthcare is not doing great. So, if you look at it as something to kind of, okay, it's not going to move around a lot, I think the SPX is probably a better idea. So that's what I think from a vol point of view, that's what we got. Also on the blog, I noticed, the at-the-money volatility goes down to, in the SPX, your at-the-money vol, we were looking at a $95 at-the-money strike on the close yesterday. And we're trading 28.80 now, and that strike is down to 80. It is down to 80, 83, $85 already, right? So we went from 95 to 85 literally overnight on the at-the-money. That's a pretty big drop, a real drop in vol, okay? Real drop in volatility. So we got from 14 vol at the money, 14.5 yesterday to 13.33, a full point down at the money, and VIX is starting to come in a little bit commensurately with that. So, what's going to happen with the trade thing? I think they're trying to work it out. The headlines come and go. But ultimately, that's the trade. So how do you set this up? Like, I think 3,000, 2,700 for an iron condor. And as far as that goes, that's, I think, that type of trade. As far as VXX and vol goes, I did note some interesting things in our vol newsletter this morning. There was some opportunity in VIX early this morning, and that is long gone. There was quite a few buyers of the 15 puts yesterday or earlier this week for 15 cents. They're trading 50 now. Even the 16 puts for $1, I looked at some ideas this morning. I think that are already gone, unfortunately, at this point, because now they're really starting to take vol down. So, will the whole trade thing blow over? It certainly could, but I think that sets some sort of arrangement for the broader market. I don't think that's going to change very much. My closet pick of the year, by the way, is still Walmart. But I would say I think it can become a real competitor to Amazon at some point. It's not quite there yet, but it does have the retail buildings that Amazon does not yet, and it's building its web infrastructure out very, very quickly. And it already does have the warehouse and distribution center to match in Amazon. So Will it become the, will it become a competitor? I don't know, but I think it has a good shot. So that's something to keep an eye on. And that stock has come back quite a bit from, I think, the mid 60s a couple of years ago. So keep an eye on that as kind of a, I would say, like a long-term long. Other than that, that's our vol report for today. And again, I see more of the same. What could be the low? It is possible that we see a 14 vol, 14 handle by Friday, 1450 or something like that. And like I said, the easy way to do it is just, already they've taken $10 out of the straddle, the straddle that basically the 1-month straddle and VIX, if you read the blog, they've taken $1 out of the at-the-money straddle. I'm sorry, $10 out from 95 to 86. So I could see it's possible. It wasn't long ago when the vol on this thing was around 9.5, 10%. And that was that was the last VIX expiration. So anything is possible. But at this point, a couple things to look at here is, you want to see the curve kind of normalize and start to stretch out a little bit. You're getting a little bit of that now, still not a lot, right? But you are getting a bit of that at this point. So the steeper the curve gets, the more normal it gets, the more the market is kind of getting back into, all right, we can handle the volatility we have. We don't expect vol to jump a bunch higher anymore, but it looks like we are settling into, I would say, kind of a range. All right, that's it. We'll see you guys in our chat room. Oh, and I almost forgot, our big event is here. If you haven't signed up, come to our session. Mark and I will be doing some live trading, showing you how to use our Edge Hunter sheets. There's food, great Chicago food, Cubs games, a lot of great speakers, all people that trade and make money, showing you what they do. Plus, you get to eat a steak on Mark. I mean, even though you're giving us money, it still feels like Mark's buying the steak, so that's always fun. Anyway, if you have any interest, let me know. If you have any interest in our mentoring, anything else like that, send me a note, andrew@optionpit.com, and we'll see you later.